Nelson with Allendale covering the wrap-up commodity comments. Today is Wednesday, May 25th of 2011 here. Of course, the main story of the day was certainly traders watching the rains, watching the radars on their screens, rather than watching too much as far as active charts and active quotes here. With all the rains here today, we're still talking of 1 to 3 inches here from much of the central through eastern Corn Belt. In the next 2-3 days, looks like the northern plains, Nebraska on up through North Dakota, anywhere up to 3 inches over the next week or so. So certainly the key issue right now is rains delaying plantings, still making concerns over acreage and also concerns over yield here. As far as outside markets, can't say too much to really speak of as far as affecting the trade today. Crude was up $1.47 on the last trade. The U.S. dollar up 1 point versus yesterday here. As far as corn, up 9 cents today. As I said here, rains being a key issue here. Also towards the close, Reuters did release a survey of 15 analysts, just asking them, what is your current working total on production, acres, and yield? Of those 15 analysts, and that included Allendale as well, the trade suggested, our working totals for 2011 are 307 million bushels less than what USDA told us in May. So certainly the trade is looking at some numbers which are a little concerning here, and obviously USDA's May ending stock estimate for new crop of 900 million bushels is certainly a bit overstated. That realistically, you're probably looking at that being down to 750 or so here by the time USDA factors in lower yield as well as lower acres here. So bottom line for corn, certainly some good news here with today's rains and those issues here, and certainly also some concerns regarding production here that the trade is already taking off their balance sheets. For soybeans, the 4 3/4, the numbers really weren't that impressive as far as the Reuters survey of analysts. The same 15 people, including Allendale, suggested production maybe about 25 million bushels overstated from the May USDA number here. So 25 million bushels, probably not going to change the numbers too much once you work it all the way down to the balance sheet. Keep in mind, though, it's likely many groups like ourselves here, we're not adjusting acres or yield too much here just yet. Many people like ourselves are saying for soybeans, let's not adjust our working totals too much until we actually see this soybean planting go through here. So with this in mind, 25 million bushels may not seem like a whole lot, but keep in mind, most people were probably a little conservative for the soybean numbers here. For wheat, we can certainly point out we should have been higher today anyway. Still some concerns over EU, the idea that rains over the next couple of days may be disappointing. Also some concern, obviously, over the spring wheat, with these guys picking up to 3 inches of rain from Nebraska through North Dakota. That certainly will impact spring wheat planting, that they are severely delayed up there as well. Of secondary focus, we mentioned this Reuters survey here. In fact, they asked people about their spring wheat estimates here. While USDA did not give a May spring wheat estimate, they only gave a total winter wheat production number here. We will point out that the average guess of 543 million bushels of spring wheat production was 73 million bushels less than what USDA told us we produced last year. So keep this in mind. In March, USDA suggested spring wheat acres are going to increase dramatically, and guess what? The average trade guess says, what, we're actually going to have a smaller crop than last year. So certainly a big thing here, and that's certainly why the Chicago wheat contract up 16 3/4. The Minneapolis led the way up 31 1/4. Obviously, this Minneapolis is the spring wheat contract. So that was certainly a lot of excitement here for today on the grains. Over on livestock, a better day finally after multiple weeks of problems here. Cattle up $2.17 on the June contract. Bottom line is we finally reached some cash cattle prices, which may have gotten a little too low compared to wholesale beef. Our own models suggest packers are losing about $47 per head 2 weeks ago. Our own models suggest cattle bought today actually could run a $75 per head profit for packers. So obviously you will have some people suggesting, cash cattle may have extended a little too far so far, and maybe actually steadied, maybe a little higher here next week. So bottom line for cattle futures, we probably will see some higher trade going into tomorrow, and then again on Friday as well. As far as some issues on the charts, there are some gaps left from from 2 days ago on most of these charts. today's action, we filled the June gap. That ran up to 104.30. There's still a gap left on the August and the October. The August one to keep in mind is 106.20 to 106.92. We might be able to get up there here. So keep that in mind. We've got a nice little short-term issue here. You also have some people on the floor suggesting a bottom. That type of talk is already starting here. As far as our opinion, obviously we feel that we have not even come near yet the big supply hit of the summer, so we are not calling this a bottom. It is a nice little low and a nice rebound we're going to see in the next few days, but obviously we feel this is certainly there are much bigger issues we have to work through here. Over on the hogs here, up 85 cents on the June contract. Certainly a small rebound there, not as impressive as on the cattle. We do have some gaps to speak of on the charts as well. For the July contract, there is a gap still open, running from 88.85 to 89.32. So you might have another argument here for a slight rebound on this one here. We wonder if we can get that trade here up to that price. Keep in mind for hogs, we don't have that incentive yet for higher trade. We still are plagued by those issues of gas prices, cheap chicken here, and also some concerns about, we still need a good grilling week yet here. So as far as a hog end, it's nice to see this rebound today, but we obviously can't say that we've got this a nice bottom in here just yet here. So overall, better trade for the grains and also the livestock. Let's see if we can extend this maybe a little higher tomorrow on the grains as well, as we are watching these weather maps. So far, reports we've heard from all producers actually been a little higher than estimated as far as production, or as far as rain totals so far here. So a lot of issues going on here. Certainly our main thing we're watching for is, will these weather maps hold as far as excess rain right now? And also, will the latest maps for next week's forecast hold? And those only show maybe a brief period of warming and not enough yet to actually drive most guys out to get back to planting next week here. So that's a concern there here. Obviously, we got a lot of things to talk about here regarding plantings, yields, production, rainfall, all kinds of things are impacting us right now. Feel free to give Allendale a call to get the latest information on all of that news. 1-800-262-7538. For you guys who are not subscribing, you certainly should be subscribing to Allendale's research. We cover all the latest news and also Allendale's opinions on what's going on throughout the commodity world, simply by offering our research, and as updated, I want to say, about 3 or 4 times a day. So quite a big deal here for us, and quite a lot of news here for you guys to follow. You can get a hold of that research at www.allendale-inc.com. This is Rich Nelson. Have a good trading day and a good trading week.